I want to talk about one of the big themes that broke out in 2019. And there were a number of them. I know cannabis, everybody writes to me about cannabis, the emerging markets. People want to talk about crypto, they want to talk about energy. John likes energy. The biggest breakout last year, though, in my opinion, was ESG. That's environmental, social, and governance funds. Finally attracting attention and making for some of the most successful ETF launches last year. But it also attracted government attention. The SEC, for example, wanted more information from ESG providers on how to determine what is and what isn't an ESG investment. I'd like to know myself. Joined in the conversation along with John and Armando is Luke Oliver. He's the head of index investing for the Americas at DWS. Their ETF subsidiary, Xtractors, launched an ESG ETF in 2019. And I think the important thing here is we started 2019 last year saying, oh, it's a nice idea, ESG, but where's the money? And we saw money coming in throughout the year. You launched USSG. That's right. In the middle of the year. This was an ESG fund, and you attracted significant investments throughout the year. We have, and we've actually launched a suite of emerging markets, EFA, and also an S&P 500 and an MSCI USA. So we certainly have the equity market covered in ESG, and we saw incredible flows, over 8 billion last year, and flows into USSG in particular were very strong. And what happened? You know, I was always a little cynical about ESG, of course. Who's against the environment? We understood the concept for a long time, and yet people didn't put the money in. All of a sudden, people started putting money in. Was there something that happened? Well, one of the misconceptions, when you put it alongside things like cryptocurrency or cannabis, they sound like very new concepts. And really, ESG isn't quite as new as it feels. Really, you're looking at, you're favoring companies that have strong characteristics towards the environment, social, and governance. And really, those are just sensible ways to score a fund. These aren't overly activist approaches to picking stocks. So really, these are just stocks that not only have been measured against financial metrics, but these are now new non-financial metrics that can have big impacts on performance. So that's how we approach it. And Armando, you also successfully launched another ESG product, SUSL, in the middle of the year, on top of other ones that you've had, SUSA, that's out there. Do you want to add anything to what he said about, I'm just curious, what trigger happened? Was the world suddenly got more environmental? Are the millennials finally catching on to this kind of alternative investment? It's curious to me that we had such a strong inflow last year.
I think 2018 was an inflection point where it's no longer compounding pennies. This is actually growing. There's flows. There's not only interest, but there's flows. I think that what I would say about 2020 is a change from just being about beliefs and this idea that you're investing in ESG because that's what you believe in, to moving to understand what are the ESG related risks that you have in a portfolio and how you alleviate those risks. So there's real risks on ESG factors that could have an impact in real world investing. I guess one of the problems I have is explaining this to, if you actually look at what's in both of the ones that you launched last year, it looks like a high quality growth portfolio to a certain extent. So if we could put up the biggest holders of Xtract, the USSG, Microsoft is 8%, Alphabet is 6%, Johnson & Johnson 3%, Visa's 2%, Procter & Gamble 2%, MasterCard's 2%. This is similar to SUSL as well. I know you're not thinking hippies here and peace, love, and flowers here. These are nice, decent, reasonable growth companies here, I guess. And that's the tough part, explaining this. And when you get, some of them will throw in some oil companies, and then you can really get head scratchers, like, explain this to me, how it works. And yet you can have an oil company if they meet certain criteria that, for example, they're drilling in a safer way than other companies are drilling. That's right. And I think the inflection point kind of came from the fact that you now have these tools that allow you to be investing alongside your ESG values, but without just having this very narrow view on which companies you want to hold. So the fact that we give you, both of these funds that you're mentioning, give you sector neutrality and a tracking error very much like the underlying benchmark. So you're getting the market you've always invested in, but you've just tweaked it down to the companies that have these strong values. But you understand what I'm saying. When I point this out to people, particularly younger people, and say, wait a minute, Microsoft is suddenly like environmentally friendly and socially friendly government. I mean, how do you sort of justify? The answer is yes, right? Under a certain criteria, they meet certain criteria that you've established that lean more towards the environmental friendly, the social friendly, the governance. These are weighted differently, of course, but the answer is yes. And you sort of have to explain that to people. Yeah. Well, why exactly is,
Exxon, for example, in here, or Procter & Gamble? What have they done that's so socially, environmentally responsible that they end up on your list?
Yeah, so we look at we want to give people the performance and risk profile that they're used to. So to do that, you need to have representation from all of these industries, all of these subsectors. But then within those subsectors, we start to trim from the bottom. We take out some universal stocks that are universally agreed to be non-ESG. And then we start to filter out the bottom. In fact, we start from the top. We take the top 75% of market cap. So the idea isn't to cut out every company that possibly has something that's not ESG about it, but to actually give you a benchmark-like return while reflecting your values.
John, you get my point about this. The SEC's had exactly this question. They sent out a notice to the providers saying, could you explain to us a little bit more what criteria you're using? Because it all seems a little fuzzy. They didn't say that. I said that, but it's true. It is a little fuzzy. They're getting better. The industry is evolving, and I think I think it's evolving terrifically. But it is a legitimate question. Exactly what is ESG?
Yeah, I agree. I have a positive and negative comment. My positive comment is that I think like WeWork was kind of a good example. If you don't have good corporate governance, then the market's gonna negatively impacted you. I would say the negative comment for me on ESG is that I think people have been doing ESG, they just don't call it ESG. So now to me, the cynical side, like this is more like the factor investing versus smart beta. People have been doing factor investing for decades, and then smart beta was like the now catchy term that they use. So I believe in it. Like we're big on quality.
Well, I do too. And they are trying to tighten up. So, for example, women on boards comes in as a governance issue, right? I mean, does it get down to percentages, or not? Just things are improving. Is this quantifiable in some ways, where you can actually assign real numbers rather than sort of fuzzy logic? Things are getting better.
Yeah, I mean, we absolutely, so to begin with, we're running index funds. So the index providers are doing this research, and they put a lot of resources behind this, and they're scoring each stock against the E and the S and the G, and coming up with scores relative to their peers that enable us to filter those stocks out.
Yeah, but I think, Bob, you're mentioning one of the key things for 2020. For ESG to go mainstream, we have to double down not only on product innovation and the products that we build, to be able to offer the access and the product set that allows people to build better portfolios, but also the education to investors on what is it, what is ESG, how to invest in ESG, what are the different vehicles. Some vehicles are like the ones we're discussing, where you're looking at the highest rated ESG companies within one sector. There's going to be other products that exclude completely specific sectors, like you may exclude fossil fuels. That's for a different type of investment. So we need to double down on the education to the end investor.
I just think that the time has finally come after decades about talk. We started about banning, companies that invest in cigarettes in the 1980s, and this is a sort of a logical culmination. And for whatever reason, the zeitgeist last year was right for this. Whether millennials are more interested in, or people in general are more interested in environmental issues, they care more, or whether it's more left-wing Democratic candidates out there yelling about corporate greed, that may be combining to create interest in this. Whatever it is, I think it's a good trend. I think the fuzziness part's a little bit of a problem, but the industry learns. It gets better and better. I mean, that's the thing about capitalism. It pares down its mistakes. When it's too fuzzy and people object to being too fuzzy, they get less fuzzy. They try to quantify better. We're moving towards quantification, better quantification. And overall, I think this is going to grow even more. Do we know what the assets under management for ESG is right now? It's still very tiny.
Relatively speaking, it's about 20 billion.
Okay, we have a $4 trillion industry. So you're dealing with a fraction. Of 2 or 3%, essentially.
And these new products are core products priced at core prices. These are for the core. They're not for that satellite environmental play. These are core portfolio building blocks.
Yeah, as long as we don't get some weird ones that out there that are. We did this last year where we did several ETFs that claimed they were one thing and they were really another thing. But this is a good topic. We're going to talk about this a lot in 2020.